All right. Matt, the mortgage guy. In today's video, I'm going to talk about record number of cancellations in the housing market, more inventory coming to market. Is the housing market falling apart? Stay tuned. We'll talk about it. All right, Matt, the mortgage guy, residential mortgage broker, work with thousands of clients year in and year out, talk to hundreds of real estate agents every single month. I bring to you what I'm hearing on the ground level with boots on the ground, real estate, mortgage, and everything has to do with it. If you're looking to get pre-approved and you want to talk to my team, go to greatmortgagebroker.com, fill out the form, let us know where you're at and how we can help. All right, let's dig into it because these articles come out, and while there is some data and some truth to some of this stuff, depending on how it's delivered to you, it may mean different things, right? And I think some of the sensationalized stuff that lands in folks' mailboxes, email boxes, or on your video feed, wherever you're getting this information, it can seem probably more dramatic than it really is. So I've got this up on my screen. I'm looking at something published today by Redfin on the deal is off. Home sales are getting canceled at the highest rate since the start of the pandemic. I'll link this down below. Some buyers are backing out of deals. There's various reasons for it. And I'll tell you my boots on the ground, what I'm seeing and feeling, and why it does make sense. But first off, I want to talk about, if you see the statistic where it says 60,000 people backing out of their home purchase agreements in June. Seems like a humongous number. And if you had no context, you would say, oh my gosh, they are canceling like crazy. Know that that is 14.9% of contracts. Again, that number sounds huge. 15% of people are canceling. To me, even that sounds huge, because in general, I probably see 1 in 25, like a 4% cancellation. And it might be from inspections. It might be a number of different reasons, but a 15% cancellation rate seems really high. Well, what you've got to factor into consideration, some of these people that have bought new builds, and a lot of building has gone on over the last year, they simply might not qualify, right? If they got into contract and they were banking on a 3.5 or a 4% interest rate and they didn't lock it, and now here we are months later and rates are 5.5%. If that person doesn't qualify, canceling might be the only option, right? Another thing to consider is that we finally have some contingencies in place. People were writing offers with no contingencies, higher earnest money deposits, and kind of backing themselves into a corner over the last couple of years just to get an offer accepted. Now that we've got some contingencies in place, people are able to back out if it looks like there's going to be 15,000 in sewer repairs, or if the seller's not going to budge on, a failing roof and an HVAC system that's only got a year left of life. So reasons like that. But historically, just to put it in context, if you look at 2017 through today, and I'll link this article. Like I said, in this article, it shows this graph. The average is somewhere in the 12 or 13% range, like every month, like forever. So when we talk about 15% cancellations and that huge 60,000 number, historically, it's above average, but not terribly above average. Like the world shuts down March 2020, 17.6%. April 2020, 16.4%. But, throughout these last 5 years, you see it pretty steady between 12 and 13%. Folks cancel for a number of reasons. Job fell through, inspections didn't go as planned, whatever the case may be, right? And I think right now, between rates going up and some people not qualifying, a lot of inexperienced real estate agents and mortgage professionals alike in the market that are probably getting people into contract that don't qualify, and things like that, that's probably adding to this number, right? So while it's a big number and can be pretty wild when you look at it, it's not something that's like double the normal, right? We're talking about going from 12 or 13% to 15. So it's up 10% on the cancellations. So the sky's not falling. One interesting thing to look at, which has really surprised me, is I'm trying to look at to get a real feel for the housing market is how much are these interest rate increases affecting demand? Because I know for sure it's affecting demand. The unknown and the question we really all should be looking at is how much. Is demand cut in half? Is it decreased by 20%? Is it only down 10%? Like, that's the thing. Even the stats that come out that talk about mortgage applications, I don't feel is a true gauge and metric to look at when we talk about demand. Because just as many people can go out and get pre-approved and go out there and they could fill out a mortgage application. If they don't qualify, or better yet, they do qualify, but look at that $3,500 payment and say, no, thanks. That's not true demand, in my opinion, right? That's not someone who's going to become a buyer. So I was looking at pending sales year over year, which I thought was a good indicator, and how fast things were coming off the market within 2 weeks. I don't have the graph up in front of me anymore, but I have the notes that I wrote to see like how fast things are selling within 2 weeks, because that's a true gauge of how much demand is out there. Because if there's high demand like there has been, stuff will just not sit on the market, right? And in 2019 and 2020, it was almost identical, like a 37% absorption rate, or whatever you want to call it, for stuff coming off the market within the first 2 weeks. And then 2021, that number was crazy, 51.5%. And I'm looking at 12-month rolling average as of like late June. So these are stats that are very recent, right? I'm not talking about 3 months ago, 6 months ago, because those, quite honestly, don't hold any weight. They haven't truly felt the impact of the higher interest rates if you're looking at March and April data, right? Somebody that got into contract in February or March. 2022, 50.4%. And that tells me that there's still quite a bit of demand if half the homes are off the market within 2 weeks. Now, what I did, because you can tweak this stuff in Redfin's data, you can look at the 4-week average versus the 12-week, gives you a shorter snapshot. And when I did that, it started, in my opinion, to show a trend where there was a little bit of a gap between 21 and 22, meaning the 4-week average for 21 was 49.3% of stuff was off the market within 2 weeks. And then 22, 45.9, still well above the 19 and 20 numbers that are 33% and 42%, but trending downwards, right? Where less stuff is going to be selling within the first 2 weeks. Again, real life example on why that is happening. Sellers are looking to get February and March prices, right? And they're probably overshooting what they should be listing at. Home buyers probably want February or March interest rates, right? So there's still this disconnect between sellers and buyers as the market shifts. Sellers are unrealistic in some areas. Buyers might be unrealistic, thinking that we're already in a market where they can offer 30,000 below list and concessions and other stuff. It's probably not there yet, right? So interesting things to watch, how quick things are selling. Pending sales are down 11.8% year over year. And that doesn't surprise me either. As more and more folks on the demand side start to see, affordability issues, their buying power decrease with increased interest rates. So interesting stuff to watch. Supply, while we feel like there's a humongous increase in supply, latest thing that I looked at, when we're looking at all Redfin metros, is that we've got 8.6 weeks of supply which is, 0.7 weeks more. So not a lot more than last year. Year on year, we went from 7.9 weeks to 8.6 weeks. And if you look at that compared to 19 and 20, this same point in time, late June, which I'm recording this mid-July, but we're looking at data from late June, 13.3 weeks. It looks like it's the same number for 19 and 20. So, we're 50% lower inventory-wise, weeks of supply, than we were in those years. So that stuff still has some room to catch up. Hopefully this was helpful. I'll link this down below. A lot of stuff to watch. The market is changing. Exciting time to be a buyer, whether you're buying a primary residence or your investment property person out on the hunt for something to add to your investment portfolio. There's going to be opportunities. The market doesn't turn sharply and it doesn't turn quickly, but slowly but surely you're going to start seeing some price reductions. You're going to start seeing some opportunities to get some seller credits and all these other things. We're already seeing it, right? Just be realistic. Don't think that something that's listed at 600 and a comparable sold for 615, you're going to go out there and offer 525 and get it accepted. That's likely not going to happen, but opportunities will present themselves. Keep your eyes open. Keep in touch. Again, greatmortgagebroker.com if you want to get connected with my team and get going there. Until next time, we gonna see.